You have a rather interesting life, and now you're known as Dr. Doom.
Yes.
Why is that? And tell us a bit about this whole contrarian economy.
Basically, in 82 to 87, we had a huge stock market boom, and markets became very overbought in 87, and partly also significantly overvalued. And so I predicted the crash, and as it happened, within a week it happened. And then I had a journalist in Hong Kong who started to call me Dr. Doom, because I started to predict that the Japanese stock market would be cut by 50%. And after 1989, when the market peaked out at 39,000, it went down by more than 50%, by actually over 70%. And then in the 1990s, late 1990s, I was very bearish about technology stocks in the US, and felt that they would collapse and so on. So many times I identified markets that were overvalued. At the same time, I was one of the first investors in South Korea and Taiwan in the late 1970s, and then in Asia in the early 1980s, when markets had become very cheap, because we had a boom between 76 and 1980, and after 1980 we had a big decline in most Asian markets until the mid-80s. And then in the late 80s, I started to travel to Latin America because I felt that there was an undervaluation there due to high inflation, so I started to buy Latin America. And then I was one of the founding partners of the first Russia fund, Firebird, in 1993. So to my credit, I discovered many markets, and also my book, Tomorrow's Gold, Asia, Age of Discovery, is not a bearish book. It's bearish about the United States, bearish about the world, but very bullish about Asia. It was published in 2002. I wrote it in 2001. It was very positive about commodity prices. So, I think investors frequently overlook the fact that there is not such a thing as a good investment and a bad investment. Every asset class, whether it's real estate or stocks or bonds or commodities or diamonds or precious metals, there's a price at which it is a good investment, and there's a price at which it is a bad investment.
That's right.
And so one always has to relate everything to what the price is, and at that particular time, the price of that asset relative to other prices. For instance, everything could be expensive in the world, but maybe real estate is relatively cheap vis-a-vis equities, or maybe commodities are relatively cheap vis-a-vis commodities. And then at other times, commodities and real estate may be relatively expensive vis-a-vis equity. So we are in a constantly moving world where there are big changes, and in particular the huge changes in terms of relative valuation of assets. It's like a currency. Sometimes it's overvalued, sometimes it's undervalued.
So what's this? I mean, so I guess as a part of this reputation as a contrarian economist is the fact that you seem to be able to predict this.
Well, I don't think that anyone can accurately predict anything that is in the future, and we also actually historically know very little about the past, because the history of the world has always been written by the victors, the countries that succeeded, and not by the countries that were slaughtered.
That's true.
But I think, let's put it this way, I started to work in 1970, so I have some experience, and if I look back at 1970 up to today, because I'm writing every week and every month, and because I'm giving speeches, for me it's easy to see the whole investment environment, 1970 today, going by like a movie in front of my eyes. What happened in the 70s, we had a huge boom in gold and silver and oil, but the collapse in bond prices, and then in the early 80s we had a strong dollar and the rise in the stock market and interest rates coming down, and the boom in Taiwan and Japan, and then the collapse in Japan and in Taiwan in the early 1990s. And then the opening of the world, essentially the breakdown of socialism, communism, and so forth. So I mean, it was a very interesting experience. And then by traveling a lot, I've seen a lot of countries, the way they were. Like I came to Kuala Lumpur in 1974 the first time, then I see it what it is today. If someone only comes today, sees a snapshot of a country. I've been in Asia traveling all the time for the last 35 years. So I have a relatively good impression where a country was 10 years, 20, 30 years ago and today, and where they might go, and where new opportunities rise. Like in Asia, 1950 to 1989, we have exceedingly strong growth in Japan. But after 1970, South Korea and Taiwan have very strong growth until the early 1990s.
Yeah.
Then comes China, India, Vietnam, and so forth. And now in future, maybe it's Cambodia, maybe it's Myanmar, maybe it's India, maybe it's Mongolia, and so forth. So the centers of economic growth, the economic geography changes all the time.
That's true. So in this regard, what advice would you give our viewers in terms of investments for this current climate?
The first advice I can give is this. If you cannot tolerate 30% downside volatility when you buy something, don't even get out of bed in the morning.
Okay.
Because you understand, we go and buy something today, a house in KL, a house in Singapore, or the stock market and so forth. We could easily go down 30% before it goes up 5 times. I mean, that kind of volatility you have to live with.
Yeah.
And it's courtesy of central banks that print money and keep interest rates essentially at 0%. Secondly, my advice to investors is what you think is really irrelevant, because you're operating in a market. You are just one participant in the market. There are zillions of other participants. And so what you believe is not relevant to what will happen to the market. So in absence of being able to rely on yourself, I think you have to diversify your assets. You have to have some real estate, you have to have some equities, you have to have some cash, you have to have some precious metals and so forth and so on.
But not US government bonds, right?
Not US government bonds, that for sure.
Okay.
Although maybe for the next 10 days they rally.
Okay.
You know, as I said, there will be a lot of volatility.
Sure.
But in general, I would say you have to diversify, and as an advice in life, I think that living and investing with low leverage. In other words, you don't borrow money. You pay cash, or if you borrow money to buy a house, you borrow little. You live a happier life because you never push to the wall when markets go down. Say you have a house and it's fully paid for. And you paid, say, $500,000. The rate goes down by 90%. If it's fully paid for, you're not happy about it, but it's still the same house in which you live.
That's right.
But if you buy the house for $500,000 and you borrow $550,000, it drops 20%, the bank will call you and take it away from you. Then you have no money and no house. You understand? So I think that my advice to people is really try to go through life with low leverage and low borrowings. Equally, the worst investment you can ever make is to lend money to friends. At the end, you have the friend no more and no money.
And no money. That's good advice. One last question. If I'm a 20-year-old just coming out, in school, and I want to become like you, you're my role model, and I want to become this.
Don't take me as a role model.
I want to become this.
Maybe for the nightlife.
Well, maybe. But I want to become this investment guru. What should I be doing? And is there some pieces of advice that you can give me?
Well, I mean, I've always lived a life with lots of parties and nightclubs and everything and so forth. But I also worked a lot. And I think that I was really a lousy student. I mean, I finished well and so forth, but I never went to university because I was always skiing. And, to be in the ski team is extremely demanding on your time, especially if it's a country like Switzerland, where the competition is very tough. So I was never at university. But before my exams, I really, for 3/4 of a year, studied 10 hours a day. I mean, net, not with interruptions for toilets and drinks and so forth, but net. And I believe, there's a time where you work, and then you have to spend time on furthering your education by reading a lot and by interacting with people who know more than you do. You need to have people you work with that are better than you are. And so you can learn from them, and you have to have your own interest. I mean, people say, when do you retire? Why should I retire? You think I'm going to go and be a gardener or look after my dogs and feed them. For that I have employees. I'm interested in economics, and I'm interested in watching prices go up and down. I think, you know, some people they watch.
Fashion, right?
Some people watch soccer results. Some people watch horse race results. I happen to like to see stocks going up and down, and commodities going up and down, and bond prices, currencies, and so forth, and then analyze why is it happening. When it starts to happen, normally you don't know why. When stocks start to go up, you don't know why. When stocks start to go down, you usually don't know why. But later on, there will be indicators. Because the markets, they move ahead of the news. In other words, the markets are a discounting mechanism. Like now, everything looks quite good. Economic recovery in the world, corporate profits are good. But now, maybe stock markets go down. We will not know right away why, but eventually we'll know why.
Okay, very good. Mark, thank you so much for being here with us today, and we appreciate your time, and thank you again. We're here live on the Leaderonomics Show.